Bam bam, how's it going? How's it going? I am trusting that you are doing very well. And welcome to, yes, another episode where we are talking anything and everything around real estate. And yes, it is I, TJ, and welcome aboard. Today we are going to be talking about what property can I afford? And I think this may be a question that a lot of people will say, TJ, we know that. Do you? Well, in this video, we are going to extract a little bit on what property can I afford. And I'm going to speak to here in terms of affordability from a two-way process. And the two-way process is basically so that you can see your affordability in terms of how it works. Right. Lots of people. This is a video for people that are, just starting off in property. And we were all there, right? And I remember those days, about 10 years ago, I had no idea what affordability was all about. And I went and I said, I'd like to buy a property. And the estate agent said to me, how much do you afford? And I said, I don't know. But these days, these tools are very much available to us. We can check for yourself. And you can then go window shopping, knowing exactly how much you want. Why would you want to know that? So that you don't waste your time going for window shopping in things that you cannot afford, and you just get heartbroken. I wish I could afford. Of playing the space that you can afford and grow from there so that you can afford the stuff that really speak to the heart. Yep. Okay, let's jump onto it. Affordability. If we're talking about cash, how much can I afford versus your cash that is available? I did a short video not so long ago where I spoke about where you can buy properties for 200K. Basically, that individual had 200K. So in short, if they do not qualify for any debt, it basically means that their affordability is 200K. So should they go and buy a property for 200K? No, it does not mean that. It basically means that the affordability is less than 200K. Why do I say that? It is because when you go out there and you have 200K, you need to leave room for, what is that word that I'm looking for? Margin. Yes. I was going to say leverage. I'm always using to leverage, right? But this time around, it is margin. You need to have room for margin. What do I mean by that? Well, you're going to buy a property. We're saying that in this case here, you've got cash 200K. So it doesn't make sense for you to go and buy a property for 200K because now you have other costs associated with that purchase and you can't conclude on it because you only had 200K. So your affordability is actually less. In this view, I would say my affordability is around about 100 to 130. That's low. Yeah. The reason why I'm saying that is because you need to have what is called other costs. And other costs could be lawyer fees. Other costs could be maybe some renovation costs. There's many things that might be unforeseen. And I then leave my other 70,000. I said that my affordability now is between 100 and 130. So I'm leaving margin of 70,000 to make sure that if I buy this, I have margin to work within my affordability. Does it make sense? Good. Now, what do I use for my margin? Like I just explained now, other unforeseen stuff. Let's assume I have now concluded the deal and I've only now utilized maybe 40,000 of that 70,000. It basically means that my real margin that I'm left with now is 30,000. This can be something that I can utilize in the future for a future project or things like that. But the bottom line is that I have not put myself under pressure for the affordability. I hope this example makes sense in terms of you buying a cash property. Now let's assume that you're going to borrow some money, some debt. Again, what property can I afford if you have, we're talking about affordability. I've given you an example and how you can work around it. This is the principal part of it, right? And now let's assume that you are going to borrow. So how can you figure out how much you can afford? The first example was very much around how much can you afford. So you just need to look into your bank account. And I've then given you the process of, well, you can go ahead to say you've got X amount of money, but that's not really affordability in terms of your spend. You need to have a margin. In the margin, then you work within that margin so that you can conclude your project. You have seen many projects out there that were built and are just left idle after a while. It's because the person worked outside the margin that they thought they had and they can't finish the project. But let's go on to speak about your affordability utilizing a debt. Utilizing debt. So you can do an easy check. And an easy check you can go online. I like going online around, there's a website that is called uber.co.za. And basically what it does is that you populate all of your information, and within that information, you get to put in your credentials, how much money you have, how much you earn, and things like that. And then bingo, the website then throws you a report. And the report gives you a guideline to say, with the current interest rate, you qualify for 1 million. And at most, if you have a prime plus, let's say 4.5, it doesn't say 4.5, I think it says prime plus 2, I think. You qualify for X amount of money. So it gives you a range, right? So now that you've got the range, in my view, that's your affordability. But remember, we're talking about what property can I afford. So now that you know your affordability, then how do you go on to the next mile of what property can you afford? The simplest process that I would follow, there's so many of them that you can follow, but for me, the simplest one is that I can now match, let's assume that I qualify for 500,000. So I'm going to go online. There's so many places. If I stay in Gauteng, I will jump in onto, let's say, private property, Property 24, any of this website, and then I'll type in there on top 500,000, and I leave Gauteng, and I then search for properties that are less than 500,000. Okay, because my affordability is 500,000, so I'm going to look for anything 500,000 and below. And when I look at that, then I am going to match my 500,000 with areas that I'm happy to stay in. I did this a while ago, and I was actually surprised of some of the areas that I didn't know. What did I do? I said I qualified for 500,000, and the Property 24 then gave me a whole list, right? Yes, then gave me a whole list of areas and properties that are in the range of 300 to 450. And I was like, I like that. So I started driving to those areas to understand the areas, because some of them, they were very, very new to me. I didn't even know them. And as I did that, I started learning about the area. And from there on, I was like, hold on, how do I invest in this area? For me, it was for investment purposes. And maybe it might not be for investment for you. It might be about just buying a house. So I went in from an investment perspective. By the way, on this channel, we also kind of like speak about investments. We don't really talk about buying a house for yourself. Yeah, we do sometimes. Yeah. But this is specifically for you buying a property for an investment. So now there is a 500,000 here. Now your affordability is less than that, because remember, you always want to leave room for margin, right? And now you go out there and you look for properties 300 to 400,000, and you can then be able to understand that area. From understanding that area, you can then be able to learn how to invest. Because remember, an investment is something that's giving you money. But I did say that this video, you can take it and take it from a point of you are just wanting to understand how much or what property you can buy with what affordability. That's what we're talking about here. So it works both ways, whether it is for your personal self or from an investment perspective. Right, let's jump on to go to the last one. So now that you know how much you can afford, I do want to stress out the fact that you should be beware. Yes, you should be beware of other costs associated. Number one, with the cost of money. So money costs, right? At the moment, we've been seeing a lot of interest going down, and recently we've been seeing a lot of interest going up. So which basically means that the cost of money can come back and bite you at some point. So if you afford your affordability on 400,000 and you're anticipating to pay, let's say, 4,000 Rand on your property for a repayment, if the interest rates goes up, let's say with maybe 5% or 4%, let's hope it doesn't get there. Yes. It basically means that your repayment is going to shoot up, right? So you want to avoid that, or you want to leave, not avoid it, but you want to leave room for the margin so that you can be able, if it goes up, you can be able to afford it and you are still in business. So I hope that this video has been able to help you in terms of what property can I afford. And now that you understand the property that you can actually afford, well, what are you waiting for? Yes. What are you waiting for? We should be going to buy properties now. Follow the simple exercise. Go on to Uber. Check out how much you qualify. Whoa. What if you go on Uber and whilst you're on there, you realize that there's hojos on your credit report and you didn't know? What now? What do I mean by hojos? You've got a credit card that you thought was paid up and now it's not. You've got a blacklisting of a short loan that you thought you had closed and you didn't. Or let's just say life happened, right? And, this was a fraudulent case. What now? I will speak about it in my next video. Yep, it is I, TJ. We will check you out on the next video.